Gold market and price report from BullionVault. Monday, the 25th of September 2023. Gold prices steadied at last week's finish on Monday, down $160 per ounce from this May's new record, but holding above 2011's then all-time peak top of gold's long financial crisis bull market, even as the sell-off in US Treasury debt took longer-term interest rates up to fresh 16-year highs ahead of next weekend's looming government shutdown in Washington, writes Atsuko Whitehouse at BullionVault. With an agreement between hardline Republican and Democrat politicians looking very unlikely before midnight Saturday's deadline, federal workers will begin to be furloughed, bringing all but essential government operations to a halt. After hitting a 10-week winning streak, the dollar index, a measure of the U.S. currency's value versus its leading peers, climbed to year-to-date records after comments from two Federal Reserve policymakers repeated the U.S. central bank's message that it will keep interest rates higher for longer to fight too high inflation. 10-year U.S. Treasury yields, a benchmark rate for government, as well as many finance and commercial borrowing costs, also rose Monday, peaking at new 16-year highs above 4.50% as bond prices fell yet again. "I'm surprised at how resilient gold has been," says Anthony Saglimbina, chief market strategist at the $1.1 trillion advisory and asset manager Ameriprise Financial, pointing out that gold does not produce any income, while cash now pays the highest nominal rate in 2 decades. Last week, the U.S. national debt passed $33 trillion, with key government services heading for another shutdown from next weekend as lawmakers look increasingly unlikely to strike a budget deal in the face of opposition from the hardline wing of the Republican Party. If the Departments of Labor and Education have to shut down for a few days as we get their appropriations in line, that's certainly not something that is optimal, said key Republican holdout Matt Gaetz on Sunday. But still refusing to back a stopgap spending deal, which would fund the U.S. government for somewhere between 14 and 60 days, "I think it's better than continuing on the current path we are to America's financial ruin," he says. The U.S. government's $31.4 trillion debt ceiling was suspended at the end of May until the 1st of January 2025. After Republican and Democrat leaders agreed to avert what would have been the United States' first ever default with just 2 days to spare. The gross national debt has grown repeatedly since then, swelling by $1 trillion in the last 3 months alone. It is fair to say that the expansion of the U.S. government's debt has made the market more aware of gold's role as a safe haven asset, says Bruce Ikemizu, chief director of Japan Bullion Market Association, in his latest comment. Citing Washington's mounting debts and partisan brinkmanship, ratings agency Fitch downgraded U.S. sovereign debt last month from AAA to AA+, the first time since S&P's downgrade of 2011, which coincided with gold's jump to then all-time highs at $1,920, marked a leading credit agency saying that U.S. government bonds are not risk-free. Gold prices in U.S. dollar terms today held around $1,924 per troy ounce, while wholesale bullion in the spot market traded flat at £1,573 for UK investors and edged 0.1% higher to €1,809 for European investors. Chinese equities today fell amid new concerns about the world's number 2 economy's massive property market, as embattled developer Evergrande said Sunday it is unable to issue new debt due to a legal investigation. And European shares also declined, with the pan-European STOXX 600 index sliding 0.8% amid news of worsening German business sentiment. Oil prices rose, recovering some of last week's losses after the US Fed's hawkish interest rate forecasts, with Moscow issuing a temporary ban on gasoline and diesel exports to most countries last Thursday. The price of silver, primarily an industrial metal, held unchanged Monday around $23.50 per ounce after rising 2.3% last week.